Well, as a portfolio manager, you manage other people's money. What do you want to hear from the Fed chairman today?
Yeah, I think the main thing we like to hear, and I think everybody likes to hear, is clarification on exactly where they stand. And I think monetary policy has become quite complex in the US, quite difficult to understand. It's no longer just about hiking rates or cutting rates. It's the pace of quantitative easing. It's also about forward guidance. And I think the Fed has quite a difficult task. On the one hand, they need to explain that the economy is strong enough that it no longer needs the current pace of tapering, that it no longer needs the current pace of QE, so they can start tapering. On the other hand, they should make clear that rate hikes are still far away. So yeah, I think Bernanke needs to make clear on how the Fed views the economic development and how they will react to it.
Okay, but it's not quite so straightforward because the Fed can start tapering for good reasons or bad reasons. The good reason being the economy is strong enough to withstand the tapering, but bad reason because the Fed's maybe concerned about financial instability. That's quite an important point here, isn't it?
Yeah, although we think that the main reason why the Fed will start tapering is for good reasons, because the economy no longer needs the current pace of quantitative easing. And I think it's a bit reflective market where, for example, equity markets, the S&P, well, it made a new high recently, whereas in fixed income markets that are a lot more dependent on low rates, have reacted more negatively.
Okay, so will you be advising your clients to sell Treasuries?
Well, I think in general going forward, indeed, I think one should be more cautious about fixed income, and I think equities can be preferred over fixed income.
Okay, well, from one central bank to another, today we've got the minutes of Bank of England, the last policy meeting, which of course was the first under the governorship of Mark Carney. Whatever the bank says today, going forward in the next months and into next year, the bank's going to be pretty loose in terms of policy, isn't it?
Yeah, that's likely, and I think after the surprising statement after the meeting, I think the key issue is that the Bank of England wants to make clear that what's happening in US rates should not have necessarily an impact on UK rates. So I think that's what I stated, that there's no reason to price in a higher UK rate for the time being. So I think that's the key issue in the August meeting. Will they indeed, let's say, also go to forward guidance and make clear that rates will stay low for a long time?
But that's going to be very difficult for the Bank of England and the European Central Bank to manage. If market yields in the States start to rise, Treasury yields go up, it's going to be very difficult for Carney and Draghi to manage the long end of the Eurozone and UK curve.
Yeah, I think you can always expect indeed there will be spillover effects from the US Treasury market to UK gilts and the Euro government market. But still, I mean, I think they will try to mitigate that impact. But it's a difficult task, that's for sure.
Okay, and just to finish up, I know you also look at foreign exchange. Given what we're talking about here, is the euro going up or down?
Yeah, I mean, so it's a euro. It's always with an exchange rate. I mean, you talk about euro and you talk about the dollar. But I think in light of what we just discussed, where the Fed, although cautiously, but it's starting to reduce the pace of QE, and I think markets will anticipate also an end to zero interest rate policy in the Eurozone. The ECB just started with some forward guidance, so there's quite some divergence there. In itself, I mean, you would expect a somewhat weaker euro against the dollar based on the different monetary policy developments.